For the better part of a decade, it feels like emerging markets have been kind of left behind, right? Always in the shadow of developed markets. But what if that's all about to flip? What if a whole new era of growth isn't just on the horizon, but is already building up steam? Okay, let's get into it.
We're calling this the second wave of growth. And look, this isn't just some small ripple in the water. We're talking about a massive convergence of really powerful forces. We've got technology, the environment, and global politics all coming together in a way that could just launch these economies forward like we haven't seen since the early 2000s.
So here's our game plan. We'll kick things off by looking back at what some have called the lost decade. Then we're going to break down the three key engines that are really driving this new wave. After that, we'll get practical with a guide on how you can invest. And finally, we'll look at what this all means for the future.
All right, so to really get why this second wave is such a big deal, we have to understand the wild ride emerging markets have been on. I mean, it's been a total roller coaster of boom and bust.
The 2000s, man, that was the golden age. China joins the WTO in 2001 and bam, its massive appetite for raw materials kicks off what's called a commodities supercycle. Its economy was growing over 10% a year, and that lifted a lot of other emerging economies right along with it. But then, 2008 happened. The financial crisis changed everything. The next 10 years, from about 2011 to 2020, well, that became the lost decade. Developed economies, propped up by things like quantitative easing, basically printing money to boost their economies, and a really strong dollar, just left emerging markets in the dust.
So you might be asking, what's changed? Why all the optimism now? Well, it really boils down to three powerful, connected trends that are completely reshaping the global landscape. These are the engines powering that second wave.
First up, engine number one, technological innovation. And this is a really, really big deal. Emerging markets are no longer just playing catch-up. In a lot of areas, they're actually starting to lead. They are becoming true hotbeds for tech disruption and entrepreneurship.
And, they've got some pretty unique advantages going for them. They can leapfrog entire generations of old tech. Think about it. They can jump straight to mobile banking without ever having to build out a massive, expensive network of physical bank branches. They've also got these young, digital native populations who are just hungry for new tech. And you often see governments actively pushing to grow their local tech scenes. And hey, let's not forget, some of the absolute titans of the global tech supply chain, like TSMC and Samsung, are based right there.
This is a perfect example of what we're talking about. Just look at Nubank in Brazil. It was founded in 2014, and in less than 10 years, it exploded to over 90 million customers. Now, compare that to a similar digital bank in the UK, Revolut, which was started just a year later. The growth? It's not even in the same ballpark. That is leapfrogging in action. These companies can scale at an incredible speed because the markets are just ripe for disruption.
And all that innovation feeds right into our second engine, the double whammy of urbanization and sustainability. By 2030, 2/3 of the entire world's population will be living in cities, and most of that growth is happening in emerging market megacities. Now that creates huge challenges, for sure, but also unbelievable opportunities.
I mean, just imagine what it takes to build the sustainable infrastructure for these booming cities, everything from clean energy grids to electric public transit. It's one of the biggest investment stories of our lifetime. And a lot of these economies are grabbing this opportunity with both hands, positioning themselves as leaders in the green transition.
And they're not just talking about it. They are making massive moves. China isn't just a consumer. It actually produces over 90% of the world's solar panels. Brazil's power grid is already nearly 80% renewable. And India has set these huge goals for 2030. So here's the kicker. Not only are these countries driving the demand for green tech, but others, like Chile and Indonesia, are the primary source of the critical raw materials, the lithium, the copper, that the entire world needs for this energy transition.
The final engine, it's a big one, geopolitics. The old way of doing things is changing. Tensions between major powers and a general move away from hyper-globalization are forcing a complete realignment of global trade and supply chains.
You can see it right here in this quote from Monica Defend at Amundi. Investment experts are now laser-focused on things like the Make in India initiative. Why? Because that's a direct response to global companies desperately looking to make their supply chains more resilient, and that creates enormous opportunities for countries that are ready to step up.
This whole supply chain reshuffle is a total game changer. It's a huge boost for countries like Mexico, that's the whole nearshoring trend, and also for India and the entire bloc of ASEAN nations. India especially is on a trajectory to potentially become the biggest emerging market by 2030, thanks to its young population and recent reforms. What we're seeing is a definite shift in economic power toward these key regions.
Okay, so the case for this second wave is pretty compelling, right? But you're probably wondering, that's great, but how can a regular investor like me get a piece of the action? Well, the good news is it's become way easier and much more accessible than you'd probably think.
Just like the investment site Just ETF says here, getting into global emerging markets can be super easy and cheap. All you need is a single ETF. That stands for Exchange Traded Fund, and you can think of it as a basket that holds a whole bunch of different stocks, which you can buy or sell in just one click.
So here's how it works. An ETF's job is to track an index. This table shows the main ones. The FTSE and MSCI emerging markets are the big players, but they track a different number of companies. If you want really broad exposure, something like the MSCI IMI index also includes smaller companies, giving you a piece of over 3,000 different firms. So when you pick an ETF, you're really just picking which one of these stock baskets you want to own.
And here are a few real-world examples. Just look at that column labeled TER. That's the total expense ratio, which is just a fancy way of saying the annual fee. As you can see, it's incredibly low, just 0.18% per year for these huge established funds. That makes it a super cost-effective way to get diversified across all these markets.
So let's pull all of this together. What does the future actually look like? Well, if you look at the data, it points to a pretty clear and growing split in growth potential.
This chart from Amundi's forecast for 2025 really says it all. While developed markets are expected to grow at about 1.3%, emerging markets are forecast to grow 3 times faster at almost 4%. That growth gap right there is the fundamental story underpinning this entire second wave idea.
But beyond all the numbers and the charts, this is a story about transformation. As Rebecca puts it so well, the path forward for these markets is one defined by resilience, adaptability, and shared aspirations. It's really a story about human potential being unlocked on a massive scale.
Which really leaves us with one final thought. We've gone through the history, we've looked at the powerful drivers of change, and we've even seen the practical tools you can use. So the only question left to ask is your portfolio ready to catch the second wave?